This is the Bitcoin market report for July 20th. In this podcast, we will walk through some of the key factors impacting the price of Bitcoin. Here is our disclaimer. We hope the content in this deck is useful for you, but we encourage you to do your own research before making any investment decisions. Okay, let's get started. Today we have some general macro data to go through, a look at the Bitcoin price and some market indicators, and we'll also look at a few on-chain indicators to get a sense of where we're at. Are we overheating? Are we in bubble territory? Are we need a cyclical top in the normal 4-year cycle? Let's have a look. The M2 money supply continues to be a main factor in asset valuations globally. The Fed initiated a series of rate cuts in late 2024, specifically beginning around September 2024 and continuing into December 2024. These cuts brought the federal funds rate down from its peak to a range of 4.25% minus 4.50% by December 2024. This move signaled a shift in focus, aiming for a soft landing and mitigating recession risks as inflation moved closer to target. As of mid-2025, the Fed has been in a holding pattern after these cuts, with ongoing debate and anticipation regarding future rate movements, balancing inflation concerns with economic growth. The median projection from the June 2025 dot plot still indicates roughly 2 quarter-point rate cuts by the end of 2025. However, there is a notable split among FOMC members. 7 out of 19 members projected no rate cuts at all for 2025, preferring to keep rates steady at the current range of 4.25% to 4.5%. This hawkish tilt from a substantial minority of members signals caution. The median projections for 2026 and 2027 also show further gradual cuts, but at a slower pace than some market participants might have hoped for. The overall trajectory remains downward over the longer run. If the Fed were to cut rates later this year, a likely rising M2 increased liquidity would likely find its way into the stock market. The US dollar strengthened a bit over the last week or so, after hitting multi-year lows. The recent strength may simply be a technical bounce, as you see on the chart. A lot depends on the ongoing tariff negotiations and the Trump administration's ability and the level of eagerness to talk down the dollar. The Bitcoin Fear and Greed Index remains in the greed zone. The crypto market is generally exhibiting strong positive momentum. Bitcoin recently surged past $120,000, reaching new all-time highs as of mid-July 2025. Ethereum is also performing well, back above $3,000 and showing renewed strength ahead of potential spot ETF approval. XRP has experienced a remarkable resurgence, rallying significantly and becoming the third largest cryptocurrency by market capitalization. Other notable performers like Monero and Hyperliquid also show strong year-to-date gains. This widespread positive price action across major assets points to a greed sentiment based on price momentum. The index uses Volmex implied volatility indices to measure the market's expectation of future price swings over the next 30 days. Higher implied volatility indicates greater uncertainty and fear, while lower volatility suggests stability and potentially less fear. The index also includes the stablecoin supply ratio. The stablecoin supply ratio, or SSR, measures the ratio of Bitcoin's market capitalization to the total market cap of major stablecoins. Tether's market cap has shown a steady increase from May to July 2025, crossing the $160 billion mark. USDC has also experienced a notable increase in its market cap during this period, moving towards $65 billion. The growth in stablecoin supply combined with the strong Bitcoin price suggests that stablecoins continue to represent significant dry powder, or buying power within the crypto ecosystem. For the first time this year, we've seen Bitcoin dominance drop, as alts started to make a bit of a comeback in early July. The total crypto market cap surpassed $4 trillion for the first time, emphasizing broad-based participation. As BTC dominance falters, ETH strength and ETF flows are leading. For the first time since 2021, Bitcoin's share of the total crypto market fell below its key ascending channel for the first time in 2025, closing at 61.6% on July 18th. After peaking at 66% in June, the move is a symbolic shift, historically seen as a green light for altcoin outperformance. Bitcoin's consolidation at elevated levels may create a window this summer for altcoins to rally without triggering a broad risk-off sentiment. Over the past 2 weeks, U.S. spot Bitcoin ETFs have experienced significant inflows. These ETFs recorded a total net inflow of approximately $4.78 billion for the 2 trading weeks ending July 18th. This sustained inflow trend, particularly the back-to-back billion-dollar inflow days on July 10th and 11th, marks a historic milestone for Bitcoin ETFs since their launch in January 2024. As institutional adoption continues to grow, these funds are playing a pivotal role in shaping Bitcoin's market dynamics, absorbing demand far exceeding the daily mine supply. We'll avoid any deep technical analysis in this show, but I wanted to show one high time frame chart of the Bitcoin price and the relative strength index. Recent data indicates Bitcoin's RSI is above 70, reflecting strong positive momentum in the short term. An RSI above 70 typically suggests an asset is overbought, which could imply a potential for a price correction or consolidation. However, in strong uptrends, as Bitcoin is currently experiencing, the RSI can remain elevated for extended periods without an immediate reversal. In this chart, we highlight past times when the daily RSI hit 70 most times that has indicated some further upside to the Bitcoin price for 20 to 30% in the following 2 to 3 weeks. Let's see what happens this time. Bitcoin's implied volatility had dropped to its lowest level since October 2023 by late June 2025, suggesting limited expectations for sharp price movements. However, recent news mentions a general rally and more green candles, suggesting that while volatility might have been low, there could be a slight uptick associated with bullish movements. Overall, the dominant sentiment from the low implied volatility suggests less fear and more stability in expectations for the near future. As of July 2025, Bitcoin exchange reserves are reported to have sunk to approximately 14.5% of the total supply, marking the lowest level since 2018. This indicates a very low level of readily available Bitcoin for sale on centralized exchanges. For much of 2023 and 2024, and continuing into 2025, there has been a prevailing trend of net outflows from exchanges. Some whales and miners have been seen to be cashing in on the rally, leading to temporary inflows, but the overall market structure is described as largely bullish, with long-term holders retaining their holdings. Fewer daily flows from both large and small holders to exchanges signal less selling pressure in the market. This implies that investors are choosing to hold their Bitcoin rather than sell it, even amidst significant price rallies. Open interest is defined as the number of open positions, including both long and short positions, currently on a derivative exchange's trading pairs. As open interest increases, it indicates more liquidity, volatility, and attention are coming into the derivative market. The increasing trend in OI could support the current ongoing price trend. As open interest decreases, it indicates investors are closing futures positions. In turn, this might trigger the possibility of long/short squeeze caused by sudden price movement or vice versa. While the overall trend for the bull market is increasing open interest, the last 10 days have shown some short-term fluctuations. A CME report mentioned that Bitcoin's open interest dipped 5.69% to $750 billion. This dip can occur due to profit-taking and liquidations as Bitcoin hits new highs. Some traders may close out profitable long positions, reducing open interest. And also from consolidation after a strong run like we've seen, the market might consolidate, leading to a temporary reduction in speculative activity as traders await the next clear direction. The PUL multiple provides insight into the supply side of Bitcoin's economics, specifically focusing on miner revenue. Miners are a significant source of Bitcoin supply as they continuously bring newly minted BTC into circulation. The PUL multiple helps understand how much financial pressure or incentive miners have to sell their Bitcoin, which can impact market price. The PUL multiple has remained relatively muted compared to previous bull market tops. Reports from early to mid-July 2025 indicate the PUL multiple is currently sitting around 1.2. Some analysts suggest that Bitcoin hasn't even entered phase 4 or euphoria phase of the PUL multiple cycle yet, which historically corresponds to the most explosive price movements and market euphoria. The current period is seen as an unusually long gap between phase 3 expansion phase and the euphoria phase, suggesting that the cycle might be playing out more gradually, not differently. The market value to realized value Z-score is an on-chain indicator used to assess whether Bitcoin is overvalued or undervalued relative to its fair value based on its historical on-chain activity. Typically, a value over 5 signals the Bitcoin price is overvalued and can precede a correction. A value less than 0 signals Bitcoin is undervalued and could be a potential accumulation zone for some traders and buyers of Bitcoin. While real-time data from mid-July 2025 is dynamic, the market's continued upward trajectory suggests it has likely remained in a range around 2.5 or has moved slightly higher, but is not yet into the historical red zone above 7. The net unrealized profit/loss metric is an on-chain indicator that visualizes the overall profit or loss status of the entire Bitcoin network. It's a tool for identifying different phases of Bitcoin market cycles, particularly around market extremes. The new poll is derived from 2 core concepts: market capitalization and the realized capitalization, or realized cap. The realized cap takes the price of each Bitcoin the last time it moved on the blockchain. It represents the aggregate cost basis of all Bitcoins in circulation. The new poll chart shows a significant majority of the Bitcoin network's holdings are in unrealized profit, and these profits are substantial. Crucially, despite the price surge, the new poll has not yet entered the euphoria or greed zone. We'll leave it at that for now. Thanks for tuning in this week. For more from Augustcool Research, check us out on X or visit our website.